Good morning, good evening, and good afternoon to wherever across the world you might be watching. My name is Louis Mossman, and welcome to your daily cryptocurrency meeting minutes for the 22nd of June, 2022. Before we go any further, we do have to have our quick disclaimer, of course, and the information provided in this presentation does not constitute to any investment advice, nor is anything mentioned in an offer to sell or a solicitation of an offer to buy any security or other instruments. And of course, the rest of the disclaimer is there on the screen. But what's happened over the last 24 hours? The simple answer to that is not a whole lot. We've got our major movers slightly up on the 24-hour period, but again, it's the 7 days that really shows the poor story, and of course, the big pullback from 30 to 20,000 US dollars. If we look at what's in the top performer, as always, you've got those regular movers that have been able to sustain some jump in the market, but of course, Synthetics Network is still up there, which is good to see, of some great network activity, and the Celsius network as well. Their Cell token still going through that short squeeze, also on the screen there, and we'll get into that a little bit later on. But going to what happened in the US overnight, always interesting to see how that flows onto equity markets. A little bit of a jump up, as you can see there, but that jump up, unfortunately, just was not able to be sustained. And when you talk about not being able to sustain a jump up, you get one green candlestick and all the papers are saying US equity markets higher on strong positive movements and growth. To be perfectly honest, it's just a difficult thing to really justify. And people are trying to justify it. I understand that. But again, you're not going to get a lot of long-term movement out of it. If you want to go to the Nasdaq, again, we see that similar move up. That downtrending level of support is actually really, really well being used at the moment. Always good to see when it is used like that. But the story's still the same. We're in such a downtrend that, a lot of people are saying, these relief rallies really, really suck people in often. But it's hard to justify the fact that this is a bottom of any sorts. Where we go from here, I'd say a couple more days of a relief rally in equity markets, but that would be maxing it out. To see, a multi-week rally where there's that, larger dead cat bounce that you might call it, I just can't really see that happening. If anything, and probably the best case scenario, just a consolidation from where we are now. And if that were likely to happen, that at least gives the cryptocurrency market a breather and, of course, an opportunity to sort out all of the volatility it's experiencing itself. But nonetheless, I still think, approaching pre-COVID highs, as you can see on the screen there, is a very likely scenario, especially for the Nasdaq. Moving on to the largest cryptocurrency by market cap. What I've done this week, I've actually zoomed in a little bit. Today, zoomed in a little bit, and this is a 1 hour chart you're seeing. You can see that very brief break below the white line, which is exactly 20,000 US dollars. And we've come up to test the 200-day simple and exponential moving averages. And resistance has been found there perfectly. Now, it'll be a good confidence to the market in the very short term if we can break that. And if you are trading on this time frame, potentially a few opportunities, because as I said, I think we can hold 20,000 for a little bit longer. But it's important that we break that pink, which we have. We're sitting on it now, but also that yellow line that's currently above the share price at around 21,500 US dollars. Moving over to Ethereum, our second biggest by market cap, it's finding a lot of resistance at the same point, those moving averages. Yes, they're higher highs, which is positive to see, and we're also seeing higher lows, forming maybe a little bit of a wedge that we can see there. But again, really important in the short term, we break that yellow line, which is the simple moving average. And then, of course, it's also important that we break that next level of resistance, which is that white thin box that goes all the way back to earlier in the month, where we can see it was used as resistance multiple times when we're trying to bounce off the 1,000 US dollar level. So we're really range bound, I'd say, in the short term between both of those lines. And again, that's its trading range. So probably not a lot of trading opportunities. When you're looking at Ethereum, there's just not as much momentum and a little bit range bound. Moving on to the first piece of news for today, and we continue to talk about the movement of TradFi, or traditional finance, adopting and using cryptocurrencies in some respect. Now, this is, I think, a really, really important piece of news, and this is Deloitte using NYDIG as a facilitator for them to move into the space as well. Now, NYDIG stands for the New York Digital Investment Group, and they're a blockchain-focused financial services firm, particularly in Bitcoin. Now, what Deloitte's doing here, remember, this is one of the big four accounting firms in the world, and they believe that traditional finance is moving towards blockchain services. They said themselves on the last dot point there, the future of financial services will center around the use of digital assets. And we're focused on advising our clients on ways to engage in a regulated and compliant way. So the way I think about it is like this. I mean, Deloitte is filled with very, very many smart people. And what they're thinking to themselves is, okay, how do we, of course, maximize what we do in the future? From now on, where are the future trends in financial services, and how can we be best positioned to profit from that? Because they're a private company that are looking at their bottom line every single day. And they've made a very intelligent decision to say, well, look, we think blockchain is going to be as big as it's promised to be, maybe even bigger, and we want to be at the forefront of providing blockchain-based accounting services or financial consulting services to major businesses. Now, that's a major step when you're looking at one of the biggest accounting firms in the world making that decision. So, according to the joint announcement on Monday, NYDIG and Deloitte, they're launching what they call strategic alliance to create centralized approach for clients seeking advice to adopt Bitcoin products and services. What exactly these products and services are, of course, only time will tell, but you've got two great firms at the forefront of doing that. They're saying that it could be anything from digital asset-based services across multiple areas involving Bitcoin-related products, banking, loyalty and rewards programs, employee benefits, and more. Again, we know the use cases, and Deloitte is going to be able to figure out how major institutions and big companies can use it themselves. As we move on, I mean, the Celsius short squeeze continues. You can see another massive jump up in price overnight, 300% in just 1 week. And it's being called a GameStop-like short squeeze at the moment. Now, amid all this volatility, and I've been very pessimistic regarding this. And for people involved, I apologize for my pessimism. It's just hard to be positive when these ripples and contagions are being felt throughout the market, especially in DeFi right now. And one of the things that concerns me is the sheer quietness of Celsius. I mean, they're posting a little bit on their Twitter page, but it's all sending people to an FAQ page, or it's no real news or updates of what's going on. Remember there is $12 billion. That's a figure of May. 12 billions in assets under management, frozen to people that they can't touch. I mean, their CEO's recent tweet, this is the last time he made a statement, it was 6 days ago. He said, the team is working non-stop. We're focused on your concerns and thankful for having heard from so many. To see the community come together like this is the strongest in the world. I mean, great, the community's coming together, but they're coming together out of complete anger and fear of their money. And this is a difficult moment. He's just asking for your patience and support. I mean, patience and support is well and all, but I mean, I think the people of the blockchain world and people involved in Celsius a little bit more than be told to be patient. And I think this quietness, it's amazing that there's still positivity, still buyers out there for Celsius, unless this short squeeze should be stopped pretty promptly when all the liquidations occur. And of course, I think when you see things like GameStop and people hear the word short squeeze, they think it's another opportunity for them to jump on the back of another, maybe a wild ride higher. But we all know what happens with a lot of these short squeezes we saw in 2020 and 2021. They come crashing down again anyway. It's a very short-lived phenomenon. And I'd expect it to be the case for Celsius. Whether it is not, only time will tell. It'll be very, very important that over the next 7 days, so over the next week, that more updates are provided. And I think that is crucial for the survival of Celsius and to make sure there's no more contagion across the rest of the market. Moving on, I mean, again, this contagion is just rippling everywhere. And I mean, BlockFi is another financial services or cryptocurrency services firm that provide a whole range of things. They've signed a $250 million credit revolving facility with FTX, another major exchange. Now, this $250 million is a lot of money, and you think to yourself, why exactly do we need it? And they've said the proceeds of the credit facility are intended to be contractually subordinate to all client balances across all account types. They said it's to further bolster our balance sheet and platform strength. That's according to Zach Prince of BlockFi. Now, earlier in the year, this company was actually fined by the SEC in the amounts of $100 million for providing high-yielding interest accounts, which the SEC saw as an unlicensed security product. That's quite concerning, of course, and of course, it just adds to the number of Lehman-like moments and events we're seeing right now. We've had Three Arrows Capital, being stopped out of a lot of their long leverage positions. We've got the Terra collapse, Celsius locking up funds, and another major exchange, BlockFi, looking for a $250 million credit facility to shore up their balance sheets. And I mean, look, unfortunately, it doesn't get any better from here. Crypto lender Maple Finance, they're the latest to warn of insufficient cash amid market turmoil. Now, this is obviously a lot more a smaller protocol, but it just goes to show that no one's being spared at this point. And I will read this out quickly. The news comes from orthogonal trading, and they're admitting there is at least a $10 million loan to Babel Finance from the orthogonal USD coin pool on Maple. Maple Finance has lended more than it has borrowed. The company reports just over $1.5 billion in loans and about $929 million in deposits. So they're, of course, loaning out a lot more than they've actually got in reserve. Now, Maple Finance is the latest crypto lending platform to face liquidity pressures. The company said that on Tuesday, and to quote them precisely, there may be instances where there is insufficient funds in cash pools, the company wrote. Maple Finance lenders must wait for borrowers to repay, the company said, and as loans mature over the coming weeks, borrower repayments will increase the available capital in the pools that can be then withdrawn by lenders. Lenders will continue to earn interest and Maple token rewards during this time. So it's the continual conundrum by, of course, if there's a run on the bank's lent out more money than they've actually got on deposit with people, and the people that have, deposited their money and they're still expecting their yield or their interest for providing this, liquidity for Maple Finance to then lend it out. But when there's nothing being repaid back or potentially issues in markets where people need that money all at once, those $929 million in deposits, they're not really actually there for them to be withdrawn upon. So, again, it just goes to show the contagion is real. And unfortunately, I think it can get a lot worse. What I am surprised is how Ethereum is holding it well above $1,000 US. That's probably the biggest threat to a lot of these DeFi protocols. And Ethereum, which is an intermediary, or at least a protocol where projects operate on, and a lot of these tokens are built. So definitely something to watch out for moving forward. And as you can see, this is the price of that Maple token over the last few weeks. As you can see in May, when this whole Terra Luna and Celsius fiasco began, the coin has absolutely crashed from 60 down to $20 US per token. So there's the impact. If you had all your funds staked in Maple, that'd now be worth a third of what they originally were. Moving on to a final piece of cryptocurrency news, looking at the hash rate for Bitcoin. So we all know the hash rate, the more people looking to mine, the more competitive it is to mine the next block and earn rewards. Of course, the cost of mining goes up and the hash rate follows. Now, Iran has recently had to crack down on crypto miners as electricity demand surges. We see this among a lot of those Middle Eastern countries, particularly Kazakhstan. They also had a similar issue facing electricity outages. 6.9% of all Bitcoin in the mining in the world actually took place in Iran in June 2021, but the country's Bitcoin hash rate share has fallen to 0.2% of January 2022. Iran will cut electricity to 118 licensed crypto miners starting June 22 as summer temperatures drive up power demand. Energy Minister spokesman Mustafa Rajabi said on state TV, according to a Bloomberg report, according to forecast, this week's consumption requirement will exceed 63,000 megawatts, which mean there will be a limit to electricity supply. So, of course, when it gets hot in Iran, crypto miners need a lot of air conditioning to cool down their machines. And when there's a limited amount of electricity to supply around the country, the government's looking to shut these people off first. They're prioritizing a lot more than crypto mining. And that's always going to be the case around the world. Always, though, interesting to keep up with the hash rate and who's actually involved in mining in the world. Moving on to institutional investors. I mean, we're seeing a lot of this movement away from Ethereum. They're actually ditching Ethereum in favor of some of their biggest rivals in what might be your Solana and other smart contract platforms. In the latest digital asset fund flows report, CoinShares says Ethereum investment products have suffered over 10 weeks of consecutive outflows of what's known the words, which is Ethereum's plan to transition to proof of stake. Ethereum continues to suffer with outflows totaling $70 million last week, having suffered 11 straight weeks of outflows. Again, the loss of confidence is a contagion, and it's just another indication of what's happening in the market. And I just like to outline that there. But to end the show today, we're going with our hot opportunity. It's a difficult market to look at cryptocurrencies in, but I brought Zilliqa. You might have noticed that they're one of the top performers over the last 24 hours. They're a leading blockchain project that looks to build decentralized applications. Essentially, they're a smart contract platform. They've actually got some great new projects built on there, such as Simplehold, the Atomic Wallet, AutoFarm, and CryptoSlam. Now, they're obviously aiming to be very interoperable with a lot of other projects, such as Polkadot, Ethereum, Elrond, and the Near Protocol. And a recent announcement is they're one of their top, games. They do a lot for DeFi and a lot for gaming in particular. One of their most recent games is having a lot of success. It's called the Zilliqa shooting game, and it's the poly shooter where they've now released map after map after map in consecutive days, and it's seeing a lot of attraction. So, I mean, if you're looking for a short-term trading opportunity, Zilla might be the one for you. As you can see on the chart here, we have used that crucial level of support, which has been used now a few times, as indicated by those boxes I've put on the screen, and it's jumped up over the last 24 hours, and it's shown a bit of momentum, looking to cross the mid-Donchian channel, and we're looking for these little spikes up in price that could lead to a potential price appreciation. Other for that, that's the bright idea for the day. Thank you very much for tuning into your Investment Committee Meeting Minutes. My name is Louis Mossman, and of course, as always, I'll see you tomorrow. Thank you.